Well, everybody, this is Dr. Keith. Hope you had a great holiday. Most of you are still in holiday spirit, right? With New Year's coming up. Yeah, we'll get started here in just a minute. If you can just verify that you can hear me okay, that's important, obviously, and that you can see my slide. It's just the header, seasonal trading, futures, Forex, and stocks. Excellent, John. Thank you. Al, nice to see you. Happy New Year. Brett, excellent, folks. All right, first I'm going to apologize. Not that it was my fault, but I am getting over a cold. So I will mute. I'll try my hardest if I do cough to mute. But if I sound a little different, it is because I'm just getting over being under the weather a little bit. You know, with kids and everything, it happens, right? Okay. So I've got 11 Eastern, 8 Pacific. So we'll go ahead and get started. This is being recorded, and we will send this out afterward as well. Okay. So like always, before we get started, you know, it's important to read and understand your risk in trading, right? Most folks lose money in trading. You should always talk to your financial advisor on your risk tolerances and so forth. Everything I'm showing for educational purposes only. Right? I'm not a licensed financial technician, although, as I've mentioned, I've got my PhD in finance, been trading live account for over 13 years using seasonality and data mining. Okay. So again, very important to understand that, though. If you can't, I don't want anybody to risk money they can't afford to lose. Okay. It's just not, you know, I get good stories to my inbox and I get bad stories. And the bad stories are always because, you know, a trader's doing something that they shouldn't be. So again, don't underestimate that. Okay, do the right thing with your own trading account. Okay, again, I'm not going to spend much time on that. Today will probably be a little bit less than an hour, though, because really the purpose of what I'm showing you today, I get a lot of questions on my from my website, you know, seasonaltraderpro.com. I have a data mining section, and I've been getting a lot of questions on, well, what exactly is that? And I have a couple videos on my website, but I figured I would just spend the next 30 minutes or so, probably anyway, right around there, explaining that and showing you a good strategy to take advantage of that type of trading. Okay, so that's my goal for today. And as you have questions, again, you can type them in, and as I take breaks and grab some water, I'll answer them, okay? And then I'll leave time at the end as well, no worries. Again, a little bit about me. Those that don't know me, you can read the slide there, but basically the way I trade, folks, is off of high probability. If I don't see a stock, Forex, or future that has a edge from a seasonal standpoint, I don't take it. It doesn't mean those wouldn't have worked, okay? But I'm about accuracy in building my account. And, you know, historically, I've been 85% or more accurate in my trading accounts because I'm very peculiar on what I trade. And that's also why I trade all three markets. We are going to focus on stocks today, but everything I talk about plays a role in futures and Forex. Okay, my original trading started in the futures market. Okay, and the cool thing about seasonality and data mining, if you do trade all three markets, again, stocks via options, futures, and Forex, you can then select the best of the best trades that show up. Okay, and that's what I do. Okay, that's what I do. But many of you only like to trade one market, which is perfectly acceptable, whatever you're comfortable with. And there's a lot of great setups in every market, hundreds of setups in every market each week, or each month, I should say, each year. So that's not an issue. It's about being patient and waiting for those triggers. Okay. So again, as I mentioned, my main focus on today is my data mining package. You know, as I was doing some one-on-one mentoring with my clients, I realized that even though, in my opinion, my data mining seemed fairly simple, but that's because I developed it. So I wanted to make sure that when you see a short video of some of my data mining techniques, everything makes sense to you. And that's why I want to spend today going over that, okay? And again, the data mining I have works with all markets. Again, I've got a data mining package for futures, Forex, and stocks. I'm going to focus on stocks today, but this is relevant for all markets. Okay, so what I want to start out by explaining, what is data mining, first of all. Okay, again, that was one of those things that because I've been doing it for so long, I forgot, which I shouldn't, because again, I'm a professor at heart, right? I forgot that some folks don't even know what that means. And that's not a bad thing. It's the reality. So I kind of like to put in my own definitions. And when I'm talking about data mining, what I'm talking about is the probability of an underlying. So let's say Apple or Amazon or Facebook or Google or Broadcom, okay? The probability of an underlying going in a certain direction during a certain time frame, okay? And this is over years and years and years of data, okay? I don't really look at anything that doesn't have at least 10 years of data, at least, okay? But the more data I get, the more data points, which again is off a yearly. When I say data points, I'm talking years, okay, which I'll clarify in a little bit. I've got some trades out there from data mining that I've found that have worked. They've been in the markets for over 50 years and they work 90% of the time, folks, okay? So why is that important to me? Because what I do is I look for a long play, in this case, during that window. I don't just go in off the specific dates, okay, which again, this all makes sense in a little while. You could. I know people that do it, okay, usually larger accounts though. But I go in off of my certain triggers, okay, and you can use any triggers. You can use the triggers I use, with my modified Laguerre or my oscillator, right? Or you can have your own, okay? The key is to have a system in place during that high probability window, and then you should expect to make money, okay? You should expect it. And you're probably thinking, Dr. Keith, you said you're not feeling that great. Maybe that's why you put that, do you brush your teeth every morning slide, right? Like, what the hell are you talking about? The reason why I wanted to put that in there is, one, to make sure you're reading the slides. But two, the reason why, you got to look big picture on data mining, folks. The reason why a certain underlying moves in a certain direction during a certain time frame is because of routines. Okay, remember, who moves the markets? Big money. Okay, however you want to define that, right? Hedge funds, let's say, the Fidelities. They are all about routine. So we get up in the morning, we get cleaned up and brush our teeth, right? Why? Because that's our routine. Hedge funds do the same thing, or big money, I'm going to call it, okay? They buy a certain stock with high probabilities the same time year over year, and in multiple cases throughout the year on many stocks, okay? And a lot of you, even though you might understand the concept of data mining, maybe you didn't understand how that happens, though, okay? That's why, one of my data mining packages is for bears as well. Now, granted, I have not been using it very often because I like to use the bear data mining when, in my opinion, we're in a bear market, okay? Not that those won't work out, because they do year after year, but I like to go in the direction of what the overall market's heading, okay? Because again, I'm all about high probabilities. So I always get and I love it. I get emails every week pretty much saying, Dr. Keith, why is this particular stock, future, or Forex, why does it? What is the reasoning behind this move year after year? And yeah, I've done a little bit of studying on it because, again, as a university professor, I get paid to do research on trading. It's just something I love to do. But what I have found, my conclusions on all of that is, for the most part, there is no valid reason other than habit. Okay. That's why I don't get caught up in it. I don't try to figure out, you know, if you're trading, let's say you're trading one of the grains in the futures market. Okay. You're like, well, yeah, it should go up this time of year, or it shouldn't go, or it should go down this time of year, or whatever the case is. Sometimes it might make sense to you, other times it may not, but who cares? As long as you're in the direction of those probabilities, it doesn't matter, right? Analysts are going to come on after the point and say, well, this is why. I mean, the bears have been waiting to come on in the news now when the market finally does make a retracement, right, to say why. But they're awful quiet now that the market keeps hitting new highs, right? But when we had those 2 down days in the market, earlier this month, right? Everybody was coming out because they all were saying, this is it, now here we come. Here comes a recession, right? Or the probabilities weren't saying that, right? And that's why I like to do those public videos when I know the bears are out there. You know, I go on YouTube and I'll say, no, we're not there yet. It is going to happen at some point, but there is many reasons to expect we're going to continue higher, okay? Charles asked a great question. So before I go to the next slide, let me answer. He says, is there a difference between data mining and seasonality? They're interrelated. So, you know, seasonality, you know, like for example, and you'll see on some of my charts, I'm basically hiding my seasonal indicator today because I want to focus on the main chart with the dates from the data mining. But they're basically, they are the same. The reason why I have 2 different sets of data is because data mining will give you key dates, okay? Where seasonality just tells you during a certain month, for example, August, I love to go long bonds. But then I can show from data mining the actual probabilities based off of that, okay? So the way I trade, the exact way I trade is I have my favorite highest probability watch list of my data mining throughout the year on all markets. And then obviously when I click on it, it'll show my seasonal chart as well. Okay, and then when I get my triggers, I take the trades. I mean, that is about as simple of trading I can do, yet it's highly accurate. Highly accurate. Okay, great question. So again, and this is I'm going to spend a couple minutes on this slide because this is where when I was meeting with a client about a month ago, I just thought that, and I'm not criticizing, this is my own stupidity. I just thought that this all was logical. But again, it's because I created it. So let me explain this. So when I have my data mining, first of all, they're Excel spreadsheets. Okay, I've got one for let me change the color here. I've got one for stocks that are bulls. So I'm going to call it SB. Okay, I've got one for stocks that are bears. I'm going to call it BR. Okay, and then I've got one for futures, and I've got one for Forex. They at least have 700 throughout the year on each of these. Okay, and then I actually even have a future spread one, which is phenomenal. And I'm going to do a different webinar on spreads, so we won't talk about that, but that's coming soon, okay? But anyway, so we're focusing on stocks today. So this is just a screenshot of my Excel sheet that I wanted to show you, okay? And then we're going to go into live charts, okay? But for example, APD, air product and chemicals. I look to go long 1024 to 15. So basically, if you bought the stock, okay, I do options, right? I don't like to buy flat out stocks. But if you bought the stock from a pure data mining perspective on 1024, sold it on January 5th, okay, it's worked, it's gone higher in price 97.2% of the time. And this 36 is 36 years. So it's worked 35 out of 36 years, okay? That's the power of this type of data. 35 out of 36 years, APD's gone higher between 1024 and 15. Is it guaranteed it's going to go higher than this year or next year? Absolutely not. Okay? But what is it telling you? There's a high likelihood. Okay, I'm going to show you how I enter. I don't enter just based off of the dates. Okay, well, there's a few exceptions on some short-term trades, but generally speaking, I wait for my triggers during that window. Okay, but more importantly, when I get a short trigger on APD during this time frame, what do you think I do? I ignore it, right? I ignore it. Again, it does not mean that short wouldn't work during this time frame, but the odds are it's going to go higher. It's gone higher 35 out of 36 years here. Okay. Yes, Caesar, and I'm going to talk about that in just a minute. Okay. Okay. So here's another example. Excuse me. I didn't get to mute in time. AT&T. Again, I purposely just grabbed them. They're relatively close to dates, but 30 out of 35 years, AT&T during this window. Okay, again, these are years. So these are number of years. These are wins. Okay, meaning it's gone higher. So 30 out of 35. So you could decide and say, you know what, 86% is pretty good, but I want higher probabilities. You know. And this, yes, so in the Excel, I'm going to get to it, but the Excel sheets that you would get with this data mining, folks, you can sort. Okay, it's an Excel sheet. So you can sort by date. You could sort by percentage win, you know, like 97%. You could sort or do a search and saying, let's say you like to trade Amazon. You could do a search and find the best windows of opportunity for that year, for the year in Amazon. Okay, you could sort it any way you want. I sort it by month. And then I create a watch list in Thinkorswim. Okay, that's what a lot of clients do. And a lot of clients just trade off of those. Okay, I do other trading as well, though, with seasonality in general. Okay, and then one more. Remember the S&P, right? The markets are going to go down. Everything's going to fail. Trump's getting impeached. Trade wars. Well, 32 out of the last 37 years, folks. Between 1119 and 1228, the S&P's gone higher. So again, it doesn't mean it's going to. It's saying over the last 37 years, though, 87% of the time during this window, it's gone higher. So I'm not taking shorts during this window. I'm waiting, and if we get a trigger long, I'm taking it. And obviously this year we got plenty of triggers long on the S&P. Okay. Last year is a great example where December was actually a bearish month, but I never got a trigger to go long. Okay? I don't just go in off the dates, folks. Okay. So again, I wanted to spend a few minutes on that because I realized that when I was going over with somebody, they didn't realize this was years. So 36 years, 35 wins. 35 years of data, 30 wins, and 37 years, 32 wins. Okay. Okay, so again, just to kind of summarize, there's many ways you can use the data mining. You can sort by the underlying, you know, again, by the stock in this case, or the futures, or the Forex. You can sort by date. You can sort by number of years of data. Okay, again, there's some in my database that are over 50 years. Okay, over 50 years with over 80% accuracy. Okay, I mean, that right there should tell you 80% accuracy with 50 years. I'll take those odds. You can also sort by win percentage. Okay, so you can do it any way you like when you have that data. Again, many clients, including myself, will create a watch list by month and then just wait on the triggers. Okay, just wait on the triggers. All right, so what I wanted to do is just kind of show you exactly how I do it. Okay, I wanted to show you a few from back in November, okay? Because now November's over, right? We're almost at the end of December. I want to show you exactly how I do it, okay? So let me bring up the live charts. Okay. Can you all see the Thinkorswim chart first of all? Just type in a, yeah, okay, perfect. Just want to make sure. Okay. So again, this is the, and what I'm gonna do is I'm gonna hide the watch list for now, and this is my seasonal indicator on the right. I'm hiding it because I want to focus on having let you see the chart. Okay. So on the spider, SPY. Okay, what this is showing you from 1120 to 13, 48 out of 59 years, it's gone higher in price. Okay? 48 out of 59 years. So if you're really playing the bear side right around Thanksgiving to the end of the year, it would have worked last year, right? It would have worked last year. But what about the other 59 years? Not many. Okay? So again, my point is to educate you. In all honesty, if you don't want the data mining, that's cool. I'm giving you some trades. This is recorded. You can use them. Look for them next year. But don't go short during this time frame, folks. Or if you do, understand your risk tolerance, okay? And of course, we hit new high today, right? But 40 out of 59 years. So this green dotted line is when I would, in theory, start looking for longs, okay? And again, I don't want to complicate it. I will also go back a week to 2 weeks early if I got a trigger, okay? So like if we would have got a trigger back here, for example, which we didn't, but if we did, you know, I would take it. Okay, I'll go in a couple weeks early on these minings, okay? My actual trigger though, off the daily, again, this is off a daily. Okay, I have two ways of entering, right? My Laguerre, like an entry point is right here when it goes above, okay, which I'm not going to spend a lot of time on. You can use your own entries or you can use mine, right? But again, that was before the window, okay? But I'm just showing you. Here, we had a curve, okay? So you can take it knowing it's going higher with high probabilities. You can take it on the curve, or the reason why I have my Stoke is because it gives me my entry right here, okay? It gives me a more aggressive entry than the modified Laguerre. So this was my entry on the spider this year. And you should go into these trades, folks, understanding the odds, right? Nothing's guaranteed, but I'd rather, again, I always like to give the example because this is how when I originally started trading, I told my wife, and at the time she was my girlfriend. I said, if a broker called you up 20 years ago and said, hey, I've got a stock that's gone higher 48 out of the last 59 years, and we're in the window right now where we're going long. Do you want to go long? Right? You all would do this. Every single one of us, right? In fact, you would probably go and tell people at work to do it. My point is we have this available now. Okay, and there's lots of them, especially stocks, right? There are hundreds of them. And if you focus on, maybe this isn't all your trading strategies, right? Some of you are already successful traders. But if you have a watch list that you create, excuse me just one second. Okay, so if you have a watch list that you create of these highest probability charts, okay? My point is if you don't get a trigger, okay, during this window, you don't take it. Again, I'm not going long right at 11:20, folks. Okay, I'm waiting for my own triggers, okay, which happens to be my Laguerre or my Stoke, okay? But you can use anything you want, right? You've all got triggers. You've all got triggers. And let's say it's an aggressive trade, because a lot of these moves happen early, right? They can happen early anyway. So what you can do is, instead of the daily, you could go to like a 4 hour, okay? And then you could do your same system during that window, looking for an entry on a 4 hour, okay? So for example, in fact, let me go out a little bit further. So this is a 4-hour chart, 15 days back, okay? If I was looking to get aggressive, I missed a trade, let's say. Here's an entry on Laguerre right here, okay? And the advantage for a lot of you getting off and going on a 4-hour chart is what? Well, maybe you put your stop right here. You're not risking as much, right? Okay, here's a stoke trigger, a little bit more aggressive. And then right here, it'll happen. Okay, you're going to get triggers. Okay. So there's a lot of ways you can do that during that seasonal window. Again, I've got a lot of day traders that will use the data mining and then do exactly that even off smaller time frames. Okay. All right, let me go back to the daily now. All right, so that was the spider. Just wanted to, again, I'm going to give you a few examples here. So you can see how this is exactly how I trade, okay? Create a watch list. Again, I just put a few in here, just preparing for this webinar. I just grabbed a few, okay? But you could grab all the Januaries. You could grab one that are only 90% or higher or 80%. You know, they're all, almost all of them are 80% or higher. There's a few in my data mining that are like 78% because that's over, again, like 50 years of data, okay? Dover Corporation. So again, from 11/1 to 3/17, it's gone higher 30 out of 34 years, okay? Probably because my wife buys a lot of stuff from Dover for our horses. No, that's not why, okay? Remember, why is that? Because we all brush our teeth in the morning, right? That's why. I once said that to a person on the plane. He got up. It wasn't a booked up plane. He got up and go sat somewhere else. So anyway, so it's possible to have more than one trade during this window as well. Okay. So again, I don't like that color. Let me grab a red. Excuse me. So this dotted line here is when I start looking for longs, but again, I will go back a week or two early. Okay. So if you're creating a watch list, for example, of January, I'm already looking at it. That makes sense. Okay. So during this window, I'm looking for a trigger, knowing that we have until March. Okay, we have until March to look for a trigger. We happen to get one on the Laguerre, which is my favorite, safest long play, right here. Okay, so if you got in at 109.41, or let's just say 110. Okay, you now hit a high today at 116. Okay. But you know there's high probability that's going to happen. So again, I'm not shorting anything. Now, what will happen is if you got in this and you're out, let's say you were doing a debit spread, you know, or maybe, you know, when you have a trade that goes 2 or 3, 4 months, you can do a straight call, right? And you can really do well on some of those, right? Excuse me on the coughing. So, but what you can do is if you're doing the debit spreads, like a 3-week debit spread I like to do, once you get out and you make your 50% return, you just wait for a new entry, okay? Whether it's another stoke cross or whatever you're in, right? Or you can go in from the daily, you can go into the 4-hour, okay? And we had a trigger right here on the 4-hour, okay? Right here, okay? So there's a lot of ways you can play that, just knowing that. I don't just take one trade during that window if it gives me more than one, okay? Let me go back to the daily. Let me just check and see if I missed any, if there's any questions at this point. Okay, looks like we're good. All right, so LLY is another one, Lilly and Company. So from 1029 to 1227, it's gone higher 34 of the last 37 years, 92% accuracy. Okay. So again, here's a great example. The green dotted line is when I start looking for longs, but again, I'll go look 2 weeks before. Okay. I don't go in earnings though. So at this low, okay, I don't usually get in. If I'm already in the trade, I'll stay in during earnings at times, but remember there's more risk. But I don't get in right at earnings, okay? So I didn't get in here. When I got in was this green line right here, okay? Right here, when I got my Stoke cross, that gave me my entry to get long. Knowing 92% accurate, 37 years of data, that's just when the Fidelities of the world, big hedge funds, that's when they buy LLY, okay? Why is that? Because we all brush our teeth in the morning, okay? And again, you can always go a little smaller time frames. I'm just going 15 days back, but you can go further and say, okay, we basically had a move back up right here or right here, okay? Just looking back those last 15 days. Again, I'm just ignoring, you realize I ignore any shorts, right? I don't want to take shorts with the probabilities as high as they are on the long side. All right, Rockwell Automation. Okay, going back to my Ford Motor Company days, there's some phenomenal seasonals in automotive parts. Okay, so 925 to 1231. So again, I know a lot of you are licking your chops, right? Again, every time I talk about this, and I've been doing it for so long, I get so fired up because it's just, to me, it's phenomenal data. Everybody needs this, okay? As far as I'm concerned. So if this has gone higher, 32 out of the last 37 years, between end of September and the end of the year, okay, I'm looking for longs. And a lot of you are like, okay, well, here is the trigger, right? Perfect trigger, absolutely perfect, which was on like what, 10, 11, something like that. So it was like what, 2 weeks after the window, okay? Just be patient, wait for the trigger. And if you did a straight call on this, right? You know, this thing started at let's say what, 160. It's now at 204, right? You can really make some good money with these high probability moves. So one of the questions from Caesar, great question, is in the case that the RSI stays overbought, but there is a Stoke crossing, do I still take the trade? Absolutely, okay? So for example, the way I've designed the modified Laguerre, it can stay in the red here for a long time, okay? For a long time. That's why my Stoke is the more aggressive when can I enter or re-enter, okay? Like right here, for example. That's another good one, okay? Absolutely, good question. And again, you may have your own system. You may use just the basic stochastic that's free, right? Or you may use MACD. Again, I'm not saying you have to use or purchase my two indicators here. Okay, these are just what I've been very successful in over the years from my research. Okay, but just be consistent and have an oscillator that you can be successful with. All right, so ADP, automated data processing. Okay, one of my favorite stocks to trade, in all honesty. So again, the dotted line is when I start looking for my longs. Okay, right after earnings, you can see. And then here's the Stoke move right here. Okay, and again, when you have something that's worked 31 out of 36 years, yes, I'm pretty aggressive. Okay, as soon as I get that arrow on my Stoke, if I didn't already get it on my Laguerre, I'm getting in. Okay, I'm getting in. And again, this was a November. So again, these are all trades that should work next year as well. High probability of working anyway, right? So the cool thing about these webinars, right? Maybe you're just building an account. you could still, you know, everything I'm showing you, you can put in your watch list for next year, right? Okay, let's see. Stephen, I'll get to that in a minute here. Okay. Alcoa. From 11:10 to 1:3, again, isn't that amazing? 42 out of 49 years, I brush my teeth in the morning, right? So 11:10 to 1:3, 42 out of 49 years long play. So the dotted line is when I start looking for longs. And again, I don't just go long here, right? And that's important. That's important. I don't just go long here. In some years, you may not get that trigger, right? When did I get it? I got it right here. Okay? Right here. And if you're doing a 3-week debit spread that I like to do, okay, you're already out of this trade with profits. Okay, I aim for about a 50% profit on a 3 to 4 week debit spread. Okay, the ones that have a 3 or 4 month seasonal, I like to do straight calls at times, especially. One of the questions is, well, let me show you. Can you look to see the size of the move? So let me show you something here. When I look at my seasonal indicator then, okay, what I like to look at, again, the intent of today isn't to go over the seasonal web, but I just want to show you. So right here on 12/2, you see this? Let me bring a picture here for you. Important point here. So on 12/2, right here, the week, this is a weekly. Okay, up until mid-December, you see how this is straight up? Okay, that tells me that's a very strong move on Alcoa, which obviously aligns with the data mining, okay? So that's where you can see the type of size of move you're looking for as well, okay? But, you know, how many tools can you afford, right? Totally get that. All right, so let me move this back and hide that so we have more room for our charts. Clean this up. Let's look at another one. Excuse me, Adobe. So Adobe, November through March, you can take long triggers. 29 out of 32 years it's been higher, okay? So 10/28, we got a trigger, nice move up, okay? But what's funny is, if you don't know the odds, okay, the reason I wanted to show you this chart is, if you didn't know on Adobe that 29 out of 32 years has gone higher between November and March, right? You're probably like, well, this has been in a downtrend. It hasn't broke above the band, right? But once the seasonal window starts, okay, it breaks right through. Why? Because we all brush our teeth in the morning. Okay, hedge funds, Fidelities, they all brush their teeth in the morning. And for whatever reason, they're buying Adobe starting November, year after year after year. 29 out of the last 32 years, they bought more than they sold, okay? And I know I'm being very simplistic, okay? And I'm not trying to degrade for those of you that have a lot of experience trading, but that's exactly how I was taught this, and it's always made sense to me that way, okay? Excuse me. All right, Amazon. So 11/10 to 12/1. I've also, some of the data mining, there's shorter windows as well, okay? So again, a lot of you day trade Amazon, right? So if you know from 11/10 to 12/1, it's gone higher 19 out of 22 years, okay? Then you can look at, like, you know, so this is the start of the window again. Here was my trigger. It had a 3-day up move. But again, you can then go to your 4-hour, okay? Say, all right, I got a trigger here Wednesday at 2 o'clock right here off my Laguerre. See that, everyone? Let me just So right here, you know, you could just take those type of trades during that long window, okay? I'm not taking the shorts, okay? I'm not taking these. Not that they won't work, they may, but I'm not taking those. Okay? I'm only taking the long play. Okay? You can absolutely make money on smaller time frames, day trading, using the data mining. I don't do it a lot because of my lifestyle. Those of you that know me, I love trading, I live it, but I also would rather spend time during the day with my young kids and family, okay? But it works. It absolutely works. All right, let me get back to the daily. All right, so that was just a snapshot, folks, of a few, just to give you an idea, okay? Now let me do some bears. Again, there's a lot of bear moves, okay? Don't get me wrong. My data mining for bears is actually larger than my longs because, but I don't take those trades when the overall markets are bullish. Doesn't mean you can't, because they're still working. Okay, I'm very conservative. Okay, I'm very conservative. But a couple bears. For CMI coming, okay? Right here, we have a September high probability short play that played out, okay? So again, you just wait for the trigger right here. You can make money on these type of moves. Okay, again, I'm not a bear, so I'm not taking a lot of these unless I'm doing it on like ETFs, you know, bearish ETFs or futures. You know, then I'll do a lot of shorts. But on the stock itself, I don't do as many. Here's a good example on Universal Health. It's gone lower 16 out of 20 years in October. Okay, so this was the trigger a little bit early, right? 2 weeks before October, you had this move. Okay. But I know a lot of you like to trade the short side of the markets, so I wanted to show you that. Trust me, when I get signals that, okay, we've now turned over to a bearish market for now, during my alert service in that, a lot of those will be put plays, okay? Until then, I'm going to continue to make money on the long side. All right, let me show you some Januaries that are coming up. Okay, part of my holiday present to you all. Okay, again, some free opportunities for you. Okay, so Broadcom, AVGO. In fact, let me show you the seasonal as well on this. So Q1 longs. Okay, so what I love about Broadcom is come back to the middle band now. Okay. Again, my seasonal's off the weekly. Look at from now until March, that steep up move. And this, the green, means yes. So I love the fact Broadcom is just kind of consolidating around the middle band. When I get a trigger on my RSI or my Stoke, I'll do a long play on Broadcom. Okay? Year after year after year, it goes higher that first quarter of the year. AME, Ametek, or Ametek. 32 out of the last 32 out of the last 34 years. Okay, it's gone higher. So again, we're at new highs, right? So now what I'm looking for between now and the next month or so, right? We got a 3-month window coming up. I'm looking for a long play. If we were lucky enough to get a trigger like right now, which happens quite a bit, okay, you could do a 3-month call on this, right? Try to get 100, 200% return. Again, look at that nice seasonal, right? Green is good. So keep that on your watch list. It's a little more extended right now, though, okay? Marathon, same thing. 46 out of the last 50 years, okay? And what you can do, folks, is, again, this is recorded, and if you're not writing these down, once you get the recording, you can always go back and look in the charts too. So let's look at last year on Marathon. So Q1 longs is what I'm looking for. Let me go back. Let me go back 2 years just so I can see it better. Okay. So 1228, we got it here. This was 2 years ago. We had this move up all the way till the end of January, right? Then you had the move down. And what you won't see on this, I don't have it shown anymore. The trigger was back in mid-December, which you can look on your chart for that. But so let's go back now to this past year. Okay, so we're going. Now we're looking for longs. So Marathon turned long on 1227. Okay, on 1227. And there it went. Okay, there it went. The odds are in your favor, is all I'm saying. And if you're patient, you wait for your triggers. It's worked 46 out of 50 years, folks. Okay, so yes, 4 years it didn't work out. Another one I like, Lowell's. 31 out of the last 34 years in the first quarter of the year, Lowell's have gone higher. Okay, so just wait for your triggers. Again, look at that beautiful long up until April, right? Then we head lower. So many times, and I had a client that took a long play on this right here. I remember the email. But what he did was he did a 3-month option play at an 80 delta. And so his goal is to make 200% return on this between now. He got in here, he's up a little bit, but at the end of Q1. Okay. Well, the odds are he's just made a nice investment there, right? I mean, look at the seasonality on that. Okay. Probably top around 132 or higher. So there's a lot of ways to play those, folks. Okay. Okay, so let me look at questions here. There were a couple questions. Okay, I'm just reading the questions. Okay, so yeah, and what will happen here, let me go back to my slides now for a minute. Okay, so if you like what you're seeing, first of all, I'm going to type this in the chat, but this will all be out when, sorry about that, let me back up. This will all be in the recording I'm going to send you as well. Okay? So no worries. Let me just put this in the chat. And yes, this can be applied to Forex. I just focused on stocks today just to keep it under an hour. Okay, I just put in the chat all the links, but basically you can go to seasonaltrader.pro, which I'll show you, okay, and then the data mining. Okay, and if you do want to purchase, right now I have it, my launch special from my website a couple months ago, I'm still giving you 50% off. Okay, 50% off. The sale price is $9.99 for, let's say you want to grab today the stocks for bulls. Okay, it would cost you $9.99, but if you buy it within the next 72 hours and you type in at checkout this STP Holiday 20, which again will be in the recording I'm going to send you, you can get another 20% off that for unbelievable price of $7.99. Okay, or if you trade all markets, you want the entire bundle. You get to pick and choose. Okay, on how you want to handle that. All right, let me see any other questions here. Oh yeah, and part of today's deal is, let me back up. Okay, I update this data mining for my own trading purposes every year. Okay. So it's recently updated. If you do purchase within the next 3 days until the end of Sunday, you will get free updates. All you have to do is every December, email me. I'll look you up to make sure you purchased. And once I have it updated, I'll send you the updated version, okay? I mean, the good news is they don't change a ton, right? Because we all brush our teeth in the morning. Except the ads get even better, right? So absolutely, that'd be part of the deal, okay? And Steve, I do that in my mentorships, absolutely. So if it's something you're interested in, email me or you see it on the website. But I love mentoring folks. That's what I do for a living. All right, let's see. I just want to make sure I'm not missing any questions here. Oh, the question on ROK. Let me bring it up. Was there a trigger on rock around 928? Let's see here. Yes. Let me bring up my cursor. Where's my cursor? So on the RSI right here, okay? Yep. So if you did, like a 3-week debit spread, absolutely profitable trade right here as well. Or if you did a straight call, however you want to play that. The bottom line is when you're trading with these type of probabilities, again, always think back to it. If somebody called you up in the old days, a broker, and told you some of these incredible data, you'd be all in, right? You'd be all in. Now it's all there for you. Okay, so let me bring up, I'm getting some questions on the website. I think I have my website in the background here. Let me check here. All right, so when you go to the website, seasonaltraderpro.com, you can go to seasonal trading, data mining, okay? Then you can look at these all and do your own research, right? So if you look at the bundle, for example, which has everything, okay? Let me just click on bundle here. Seasonal data mining. Here's the bundle. So again, it's usually $3,000 on sale because it's on sale. And then you get another 20% off. That would be everything. Okay, and then you can watch these videos as well. Or let's say you just want to grab Forex. You click on the Forex. Okay, again, $9.99. But then once you click add to cart and you put in that STP holiday 20, it'll give you another 20% off for the next 3 days. Okay. Or you want to grab the bulls for stocks and so forth. Okay, so you get the point there. Okay. So the price for futures right here. Beautiful, beautiful moves in the futures markets lately, right? Seasonality at its best. So it's $9.99 plus 20% off, basically be $7.99 right now. Okay, you're not going to see a better deal than that. No. All right, folks. Well, again, thank you for attending. I know with the holiday season, you're all busy. I just really wanted to go over this type of trading because it's something that I honestly believe is invaluable to keep you on the right side of the market. Especially, some of you have no experience in trading. This will absolutely give you better odds. Some of you have a lot of experience, but you just want to make sure you're on the right direction of the overall odds, right? And if you do purchase any of these products, any of them, within the next 48 hours, then you can just email me and say, okay, I've got it. And if you want to spend 30 minutes one-on-one, you know, over Zoom here, I'll answer any questions you have on trading. That's part of my holiday special as well. Okay. So again, if you have questions, you can email us at support@seasonaltraderpro.com. Those of you that are on the Facebook page, there's the link to the Facebook page. Again, I wish you all Happy New Year. Let's see, Steve says address. Let's see. So in my alert service, Steve, yes, everything's posted in we call it the members area. Absolutely. Okay. We're over 90% accurate since I started publicly with my own business here for Seasonal Trader Pro since October. Okay. And again, if you're interested in the mentoring, you can click on, let me just bring it up for you with the website. You can go to Seasonal Trading One-on-One Mentoring. You can review that as well. Okay. Browse to the website. There's some free videos on there. Subscribe to my YouTube video. Okay. It's all about giving yourself the best opportunity to be profitable, right? All right, let me bring up my slides one more time here. Okay. All right, folks. Well, again, if you have any questions at all, please reach out to us. Happy New Year. I'll be doing another webinar in a couple weeks. So keep an eye out for that as well. I promised, you know, every couple weeks I want to do a webinar and do some teaching, show you some opportunities for trades so that those of you that even have small accounts, but you want to get some high probability opportunities, right, I'm there for you. So if you have any questions, let us know. Other than that, again, folks, happy holidays, and I wish you all the best. Take care now. Happy New Year.